All right, so this is pretty much just a test to see if everything is working properly and running properly. Um, been struggling with OBS over the last several days, so this is once again just a test to kind of see where things can be. Um, Hopefully, we can record longer than 30 minutes, or not 30 minutes, 30 seconds to 3 minutes, because that's seems to be the length I've only been able to record, and then the path has been kind of messed up. Um, but you know what? Just in case this video does make it out there, um, we're just going to break down the charts here. Let's go ahead and just break down the charts. We're only going to look at the monthly, the weekly, and the daily time frames real quick, and then we'll kind of discuss touch a little bit on what I've been doing over the last several days, last several weeks, as far as my trading has been going, and then just kind of leave it at that. So hopefully this video will actually make it on. If not, then it is what it is. And if you've made it this far, then you're a trooper, and I truly appreciate all the support. So right now we are looking at our monthly time frame. So last month was a bit of a very choppy, slow grind action month. But nonetheless, after coming back into a balance in April, right? Because we stopped the one time framing up, we came back into a balance in April, and then we used March's high as our balance high, right? We used that 53.2275 as our balance high area, and then, um, you know, we failed to get above that in April, rolled back over, took out that month's low, putting us back into an initial 2 month balance. Okay. Now, this month, or last month, excuse me, the month of May, we took out that balance high. Yes, we took it out, but only by a little bit. And we didn't spend a whole lot of time out there. And because this is a monthly time frame, I want to see good extension above those previous time frames, right? I want to see good extension above the previous month's high to really confirm the idea that, all right, we are actually going to have some more momentum to the upside. And so far, it has proven to be null. Now, you can say that the market's one time framing up if you'd like. There's nothing wrong with that, right? May did take out that balance high of 53.2275. So by taking that out, obviously, the monthly is in a technical sense, I guess, one time framing up. But for me, because it's an art, not a science, I'm saying that we just slightly stretch that balance in our monthly time frame. Okay. So our monthly has just slightly been stretched to the upside. So I'm using this last month's high, May, of 53.5825 as the balance high, the new balance high, right? And then going to continue to use April's low of 49.9125 as the balance low. Now you can see so far this month, the first few days in it obviously has been very choppy. Volume has been absolutely horrendous, but so far a good start. We're looking to get back above a very key level to me, which is going to be 53.2275. If we can get back above 53.2275, then obviously last month's high will come into play, and then the continuation of one time framing up will resume, right? So that is what we look for as buyers. We look to get back above that 58.25 level, get back above that key level 53.2275. We can get above that and above 53.50. I think this market really has legs to the upside, but we definitely need to have more volume kind of step back into this market, just to kind of confirm those ideas. Now let's look at the weekly within that balance range. You can see the weekly bouncing along within that range. So this is the monthly balance still, and you can just see where the weekly's just kind of been bouncing. So if we fail up here near these highs, guess what? The weekly will most likely roll over and test the bottom end of the range, maybe get back towards that 5,000 level. But first and foremost, if that were to happen, then the weekly needs to come out of balance to the downside. And we are back to balance in our weekly. So the monthly balance for me, the weekly balance as well. We are in a nice 1, 2, 3. This week being the fourth 4-week balance. If we take out last week's low of 52.05, then more downside is most likely going to be the case, right? We take out that low. There's really, you have these other lows here, but there's really nothing until that 5,000 level. in my opinion, from a weekly and monthly standpoint, that would actually hold this market up. We also do still have a gap here, a weekly gap that does get filled down here at 51.6675. So obviously, if we take out 52.05, the weekly will be one time framing down, and that will become a target on the downside most likely. Now we do have a series of lower highs and potentially lower lows come in. So if this week we cannot come out of an inside week to the upside, we cannot take out last week's high, you will most likely, like I said, most likely rotate over, test the bottom end of this range at 52.05. If we take that out, then nothing until that weekly gap fill, and then really nothing until right around that 50-50 level or the 5,000 level on the downside. So weekly definitely needs to find some legs above that 53.22 level, above these three highs right here. You can see right there, 1, 2, 3, three highs, right? Each, oh no, I hate when I do that. But each one of these highs right here, you know, it took forever for us to get back above, and we struggle to hold above it so far. So those levels right there, that 53.22 level is definitely a line in the sand for me on the upside. If we can get above that and hold above it, like I said, we should resume one time framing up in the monthly and on our weekly time frame. Now let's look at our daily. Here's the daily within that weekly time, that weekly balance. Here's the daily within that weekly balance. We were in a multi-day balance up here, broke out of it to the downside. We've come back into a balance on the daily, but so far just bouncing around inside of this weekly balance range. You can see so far that we are holding the 20-day moving average. We got down to the 50. We're holding above that. So right now, just kind of a whole lot of chop in between those two moving averages, which is, caused some type of lack in movement, in my opinion. But so far, the daily is just pretty much balanced. 53.34.75 is my balance high for this. You could use yesterday's high of 53.13.25 if you'd like. Move it down a little bit more, but obviously, ultimately, that is my target on the upside because, look at it's just the lack of anything that happened between 22 and 34. The lack of any acceptance up there was kind of my reasoning for selecting that. I think we could continue to chop inside this range if we don't really begin to move one way or the other. You could also say that the daily is one time framing up, right? We were one time framing down coming out of this balance area here. We want, one time frame down, 1, 2, opened on the gap, and then, had an outside day up, which put us back into a balance. And then yesterday we took out that high, only by a little bit to only have an inside day today. So very confusing market generated information, to say the least. I've been struggling a little bit with the day trading, trying to figure out which side to be on. Market generated information has been very confusing. But for the most part, I've been swing trading options here recently and done relatively well with that. So we're going to try to keep that trend going. I'm currently in some Tesla calls. I think there's an excellent risk reward trade to the long side. And I'll show you guys that here in just a second. I think there's an excellent risk reward trade to the long side in Tesla, especially if the NASDAQ can come out of balance to the upside as well, and start pushing towards those highs in the NASDAQ and triple Qs. And along with that, I think Tesla can break out of its little range that it has been in to the upside as well. So just to recap, daily is in a balance, doing a whole lot of chop. Weekly also in a whole lot of balance, doing a whole lot of chop, right? We need to get above 53.22. We really need to get above that level in order for us to test the balance high in both our weekly and our monthly time frames. And then once again, looking at our daily, if not, then, in our daily time frame, we will most likely, looking back at our daily here, if we cannot get above that 53.22, 53.34 and get back to the all-time highs taking that out, then this market will most likely roll back over, take out 5205, and the weekly and the daily will both be one time framing down. And not only that, one of the more disastrous scenarios is we take out this 50-day moving average, we roll over, and there are some gaps on the downside that get filled. We got this gap here, 5166.75, that weekly gap, and then we have this gap here down at 5100 that gets filled. So could get ugly if we break below that 50-day moving average. Last time we broke below the 50-day moving average and got really good confirmation, we moved below it by 3%. So if we get below that 50-day moving average, break below by another 3%, that puts us back down to around that 50-50 level that I was just describing, right? Puts us right back down to that 50-50 level, which would also be the bottom end of our monthly balance area, which could potentially give us some type of support and a bounce back up towards the highs, which if that were the case on the bear side, we pull back to that level, I'll be looking to get long for sure, some longer term calls in SPY to swing trade, especially if we get there and hold, by holding some type of consolidation within our weekly and daily time frames, just like we are on the upside here, having consolidation on the weekly and the daily time frames, potentially causing this thing to roll back over. So hopefully that makes sense. We're going to take a look at Tesla real quick. Take a quick look at Tesla. So Tesla's been in this consolidation state for quite some time now. Tesla's been consolidating here pretty much in a rather large range. Pretty large range it's been consolidating in. I guess you could say technically between 171 and 186 it's been consolidating in, but more recently each push up into the 180s has been a very, very difficult area for Tesla to get out of. Now, where I'm long against the 172, using the 50-day moving average as my out, and this area here as my, kind of area that is my no-go zone. We get below basically 171, I will get out of that trade. On the long side, I'm looking for Tesla to push up into the 190s, maybe even the 195s. I'm currently long 2 contracts of the June 21st 200 calls. I would have bought closer in the money, but kind of didn't want to spend a whole lot on the trade and wanted to give it some room to breathe. So obviously if we pull down and we get below this 50-day moving average, things can get ugly and will be one time framing down in that sense and in that scenario. However, for me, I'm looking for us to hold here. If the market can really get some confirmation with the NASDAQ and everything, if they can come out of balance to the upside, same thing with the ES futures and SPY, if they can come out of balance to the upside and really get back going towards the highs and we get some volume in this market, I think Tesla has a good chance, better odds at pushing up towards these balance highs here, getting back above 180, and then that would target 186. You get above 186. And then that would target the 190s. You get above 190, then 198, 200 would be the next general thought. So that's why I'm long the 200 calls. Obviously, if it breaks below, and yes, we have been wicking really hard right in this area. But once again, really good risk reward trade, in my opinion, right? I'm risking $3 to the downside to potentially make what am I looking for? $30 to the upside, right? That's my reward, right? I'm targeting these areas. I would take my first contract off around the 188, 190 level, I think, if we got there, and then I would look to hold the other into the 200s if we ever got there. Now, yes, that's wishful thinking. Market isn't going to play out to that exact extent, but just think about that, $3, right? Versus if I were to get short right now around the 177s and my stop is 182, right? I'm risking a lot more if I'm targeting the 50-day moving average and if I'm targeting these lower areas here, right? So the better risk reward short was most certainly up here at 182. Whenever you're there, taking some profits, targeting these lows down here, you made $10. Your risk was very minimal there. So same thing on the long side here. I think it's an excellent trade opportunity for us to get long against this 170 level, 174. Hold the 50-day moving average, potentially get some help from the NASDAQ and push higher. So hopefully you guys followed along there. Hopefully this video makes it out there, makes it into your ears and helps you understand some things. But yep, just keep on going. It's been a rough time for me, rough time for everybody. Let's keep it going. We'll catch you guys in the next one. See ya.